Hello, and welcome to today's NinjaTrader ecosystem event, How to Execute and Manage Developing Signals. My name is Juanita, and I am the NinjaTrader ecosystem platform representative here at NinjaTrader. Before we get started, I would like to do a few housekeeping items. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be sent directly to our brokerage team. Lastly, if you are new to NinjaTrader, make sure that you do sign up for a free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. Before I turn the mic over to Matt and Paul, it's important to understand that futures, foreign currency, and options trading contain substantial risks and is not suitable for every investor. It is possible to lose all funds or more than your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor recommendation, but simply educational in nature. Thank you again for joining us, and without further ado, it's my pleasure to welcome to the NinjaTrader ecosystem webinar room, Matt and Paul of StealthTraders. Go ahead and take it away, guys.
Okay, welcome everybody to StealthTraders, How to Execute and Manage Developing Signals, presented by Paul Levine. We have a little bit of housekeeping, our disclaimer, which Juanita went through. Futures trading is risky, and past performance is not necessarily indicative of future results. And without further ado, I will hand it over to Paul Levine.
Thank you, Matt. So let's get right into this amazing day we had today in the markets. I'm going to go over this because there was a lot of volatility today. So let's just look at my screen just for time reference. I'm Pacific Standard Time, so if I show 6:30, it's 9:30 Eastern Standard Time. All right, so let's get into how developing signals appear through StealthTraders and how we like to trade them and manage them. So we're on the ES, we're on the 5-minute. The 5 minutes a very popular time frame, so we'll start there. Let's go through quickly some of our studies, our instruments. So our momentum band here, which is green and red. So green, you go long, red, you go short. Our dynamic target line, you see here as I'm highlighting them. So interesting, the dot dash on the green, this is the overnight session. So that's a high, that's a low. So as we go into at 6:30, you notice you have new highs and new lows. So those gives us parameters on ranges in the market. And then we have our amazing hyper snapback study right here, which gives us predictions real time and in the future. So what's very important on the hyper snapback is the zero line. The zero line, which is the dot dash white line, that gives us trend. And it's not maybe what if, it's trend, and it all reads off of price action. So all of our studies here at StealthTraders help you understand price action simply by red you go short, green you go long. So let's identify some developing signals. So here's pre-market. We have different risk factors when we want to enter a trade or just sit on our hands and not actually make the trade. So what we have right here pre-market is failed new high. How do we know that? So a failed new high, market makes a high. In order to keep on going higher, it has to keep breaking this failure here. So what happens is simply we're looking at this particular instance where our bars fail this line here, our dynamic target line. So as it fails, let's say on the second bar, your still momentum is green. We're in a buy zone here on our hyper snapback line. However, on this bar that's failing, the previous green bar, our hyper snapback line turns red. So there's a potential that the market may not go higher. And as we see on the next bar and the next bar, it's failing. So what factor here do I want to risk to enter this trade after this momentum break to the upside? How do I know this was an upward trend? It's the zero line. So right here, price passes through our zero line, our hyper snapback line, which is red, green, and you see it posts up over the zero line. So quickly right here, I have two entry points to go long here. And by the way, for some of our traders that understand failures, this is I'm sorry, I wrote that wrong here. Let's remove that. It's a failed new high up here. So failed new high. And right here is a failed new low. That was a typo up there. So how do we quantify a failed new low? How do we quantify a failed new high? So what's happening as price went up, and it doesn't matter what time frame, it doesn't matter overnight, all these signals appear, and we'll go through different instruments and range bars and different ticks and different time ranges. But basically the session was, there's a low here, and all these bars fail to make a new low. So that's a failed new low potentially, but we want to prove that. So all this sideways motion is failing to retest this low. So that's a failed new low. So right in this area here, we have a risk factor. I want to enter this trade when it's favorable. So how do I know that? So I put in here very simple, so you can understand it. This cyan color line is a 50 SMA. I'm going to write that down because it's very important, especially on the 5-minute. So it's a 50 simple moving average. And then we'll have the 20, which is yellow. That's a 20 simple moving average. These are available in NinjaTrader. They're free studies. So what's happening, going back to our sideways motion here in pre-market, what's very, very important, and you need to remember this, the zero line, when the hyper snapback line goes above it, you're in a positive trend. When it's below, you're in a negative trend. It's very, very important because we don't want to trade against a trend. Especially when a trade starts and momentum starts to build up. What's interesting today, as you can see on this chart, going all the way through the whole entire session, It was extremely volatile, but you can trade that using the full stealth system. So right here, I'm going to make two risk factors. So this is a risk factor 1. That's the earliest you can get into the trade, just because you can't wait anymore. But it's plausible to get into this trade. Why? We're above the zero line and starting to move into a positive trend on this sideways market, choppy market. So the risk factor would be right below this candle here where the arrow is, right in there. So that's your risk factor 1. That's an entry signal. Your stop goes behind this bar where the actual entry would be. So it would be on the ES. I normally do 12 ticks. And now we're going to get into managing this trade. And there are 2 risk factors. We'll get into the second risk factor. So once I make a decision to enter this trade, I'm going above the zero line. I'm all green here. So it's simple. We're not going to be nervous. We're going to be relaxed. We just have to control those emotions. Sometimes you trade angry or you're upset. You may be fighting losses that you may have had. Let the markets tell you what to do. Let price action tell you what to do. Let our studies tell you what to do. So this risk factor 1, you have confirmation, green bar, you're going above the zero line. So you're starting to enter a positive trend. Let's just enter here very simply. I'll put the risk factor 2. So when you go above the momentum band, in other words, the bars are going outside of the momentum band here. This is a risk factor 2. It's you're placing yourself better in the trade. It's not as risky as the first trade, but you're going by confirmation of what the chart is. You know where your stops are. So this would be your stop, 12 ticks behind the low of that bar, because it may drop down because other bars are not going higher or lower. That's going sideways in the market. So we'll just say stops. We'll do 12 ticks so you can remember that. That's just what I like to do, but sometimes when the market gets volatile, we can use a momentum band to visually have a stop. And we'll get into that right now. So it's 12 point, actually we'll just do 12 ticks. I'm sorry. So we use 12 tick stops on ES. So what's happening here on this first momentum breakout with a trend starting to develop, the R2 breaks above the 50 and the 20. That's very important on the 5-minute because a lot of institutional traders, hedge funds tend to utilize 20 and 50 SMAs on the 5-minute. And I didn't make this up. It's just happening. We're just looking at it here. I don't use exponential moving averages because they don't really move with price. All these studies here, including the 20 and the 50, they're all fractal. So they're not going to give you oscillating where they're lagging in time. It's all real time. So this R2, which is a safer entry than the R1, because it passed above the 50 and your momentum band is starting to turn green. So what happens here as price moves up, the stops go behind the bars as it moves up. We always being aware that it always wants to retest prior pivots here. So as I know price is going up, I had previous dynamic target lines, which are drawn out in real time. So price is starting to attack those dynamic target lines. And then again, your stop behind the bar. So it goes up, it makes a session high. This is a pre-session high, and then you get a red bar, but you're not stopped out. So now what I like to do is I have momentum. I now have a buy signal into my buy zone. So anything above plus 150 on the hyper snapback is a buy zone. So this is a buy zone. And then this is a sell zone. So I have a green arrow. We're all color coordinated to go long. And what I like to do here is just keep in mind that the momentum band is going to help you manage this trade really easy. You don't even have to go bar by bar here to move your stop. At a point where you have percentages in your favor, just don't get out of the trade till it turns red. And that way your emotions are held in check. When do I get out? Where do I put my stop? And then you're out somewhere here. So now we've covered developing signals. What's very important is there's 2 points that we've discovered. The R factor 1 is higher risk. The R factor 2, it's more where the green bars, red bars are outside of the momentum band here. So let's just draw a line so you understand that. So that's where the money velocity, institutional money is starting to go to move this trade. So that would be.
So Paul, we have a question. How lagging or repainting are these indicators?
They're not. They're in real time. They don't lag at all. And you can see, for example, on the green bar, when I said zero line. So if you're looking at this trade, and we're going to look at other ones, you look at this trade. So you're kind of below the zero line here. This is all real time. This is price action. It's looking at price action going, hey, look, I'm past the zero line. There's a little red bar, green bar, bigger green bar. It shadows these other bars. So there's much more positive movement, buying going on in this bar. And we're green. So this is all done in real time. There's nothing lagging here. When you think about something lagging, that's a MACD. That's a moving average convergence divergence. It's not actually doing that. But without getting too technical, because I know a lot of newer traders, and you try to like maybe speed up a MACD or speed up certain things, that it just doesn't work. It's still lagging. So we want that in real time. Is there a follow-up on that, or should I just continue? Okay, I'll just continue. But you can interrupt me at any time. So what's important is these bars that stay outside of the momentum band, there's much more velocity. And once it starts going inside of the band, like you can see here, this is a failed new high. And we're going to get this setup. So how do I know it's a failed new high? I have a big red bar. It engulfs and overshadows the the green bar, it breaks down below the session high. So that's a little negative. You have a good percentage movement here. And let's just finish off where the stops would actually be, because you're going to basically, this would be a stop here. But on this particular trade that has started to accelerate, you're going to get out somewhere in the area where it kind of consolidates and it makes a failed new high. None of these bars going up, even actually here where it went sideways for about 15 minutes, it barely entered the momentum band. So you're going to think, well, maybe I should get out here or bring my stop up. Well, of course you can bring your stop up right here, but you're not getting knocked out. And the other factor is, which is really important, your momentum is positive. So the momentum band is looking at deviations in price. This is why it's real time. It's happening in real time. In order for a move like this, if it actually goes into the cloud, maybe here, you might decide to get out, but none of the bars do until they actually, the red bar and then the previous red bar. So now we have a failed new high. Here we had a failed new low. So is there possibly a sell signal here? We're well into the buy zone down here where I have the box highlighted, but I'm red. So simply to explain what that actually is, so that is a negative divergence. So as the hyper snapback line, which is green and red, as it is grinding above the 150, I have red, green, it's still pulling up, but all of a sudden the market's shifting here through price action saying, wait, we're not going higher anymore. We don't need to go short yet, but we need to confirm the short because we do have white snapbacks. That's the cherries here and the grapes. So like that's a cherry and this is a grape, which is showing you price wants to fire back up. And it actually does until the line, which is a hyper snapback line, whichever way that line is facing, to be really simple, because I don't want to get too technical, that's negative divergence. This is negative divergence, positive divergence. You have a little sideways, positive. So basically, if you drew a line, when the market tend to become over the zero line, so here's positive divergence. But if I draw a line from here to there, my hyper snapback line is grinding up. But we'll get to that later. So this is negative divergence, and you can just go by the color now. So the color is now red on the hyper snapback line. My momentum is not red yet. So where's my risk factor here to possibly continue to go long? Or is there a short signal that's setting up? So on this third bar here, which is indicating that it's a failure. Remember, your dynamic target lines are drawn out in real time. So it's going to do it automatically for you, this line. I don't draw any of these lines. The study does it all by itself. So somewhere in this area here, I may want to go short. So because I had this nice pop, I'm going to look for the risk factor too. I don't want to take this on an R1, and we'll just draw and write it in. So the R1 is not on the top of the bar, but I would say it's right on that bar, right in there. This would be the second bar. And the reason why you can risk that is because you do have some divergence here that is negative, and your stop will be on the next bar, which will be right here. So as you go back and look at the video for reference to study this, the more you watch this video, you can become a better trader. And it just happens if you watch it 4 times, 5 times, 15 times. It's all a learning process. I learn every day myself. So this is where the stop would be. You'd always put it behind that failed new high because it always can retest that. So that's 12 tick. What I wait for is the risk factor 2. And the R2 is what I talked about when the candles fall outside of the momentum study. And that's right in here. So if I'm watching the market, this is about 20 minutes. It's a 5-minute chart. Watching the market, I'm definitely heading outside of Zoom here, meaning the buy zone. So it's price is zooming out. I have a sell signal. So that confirms the R2. If you want to wait until it breaks the 20 SMA, you can, because it's building momentum to the downside, but we're not down below the 0 line yet. So we're retracing this upward movement, and it's doing a fairly good job. That's what the market actually does. It just sort of repeats itself, and it moves up and down, especially today, which was an extremely volatile day. And that's why I wanted to go over this, because we don't have a lot of days like this when I'm doing a webinar. But we can go more extensive when you purchase a NinjaTrader product and our product. We can go over this privately. So in this instance, if I wait, this is still a risk factor. It breaks below the 20. So I'm short in this area. And if you got in on the R1, which I don't recommend on this one, but if you did and you couldn't wait, you're not getting stopped out. And then you just bring your stop down into this area from the R1. The R2, you're in the trade, so it's breaking down. Remembering that I have dynamic targets that draw in real time. Plus another big factor here is I have the 50, which becomes a target. So anytime price rotates in and out of the 20 and the 50, and you can see it doing all day. It just does it all day. And that's why we utilize those two SMAs. And also here, I don't want to get too much into wave counting, but the deviations that the momentum study does, red being down here. So in this whole entire movement down, this is a wave 1. So it's telling you that this is a strong wave 1, and then it comes back up into the momentum band. So let's say I wasn't in this trade at this point, and either I missed it or I was stopped out somewhere, or I want to get back in. So notice it's in the middle of the cloud. That's sort of like where you don't really want to do anything. It's cloudy. The market's not telling me anything. However, when it does that, I had my negative divergence. We went a little green right here, which represents these 2 bars. So my study in real time is saying, hey, wait a second. So we're going up a little bit, then it can't break through the momentum band, which is red. And you also, like we said earlier, you can utilize the momentum band to keep you in the trade. And then on this actual would have moved your stop here if you're still in the trade on that dynamic line that's the dynamic line that's drawn out. But also you're going to go below the 0 line. So this gives you a quick hit that you've really consolidated on this bar as you go below the zero line, although it does drag it a little bit because there is some tension from the white and yellow lines kind of pushing up. That creates this little deviation here. And it's just that simple to look for. We're not looking for longs here at all. I've never even mentioned it. So I want to make sure that that's where traders get rubbed out, is they're thinking, oh, I can go long here. And all this is just a deviation in price. It comes up to the top of the momentum band, and then it wants to go right back down. And as it goes down, it breaks the zero line. So there's three ways to stay in this trade. There's three ways to enter the trade. And if you want to, you can enter the trade here. If you missed any of the other entries. And then as it breaks through the 50, that becomes another where you move your stop down, because that becomes support and resistance. And then as a trade starts to bog down here, we're still under the zero line. So on this, I get a lot of questions. Well, Paul, would I go long here? Not really, because it's kind of a counter trend move. Even though it's close to a half an hour, we're still close to the zero line. And there's not going to be a lot of movement in this direction as it starts to come back down, which is right around 6 o'clock pre-market. And here we have again this price as it grinds up, and I'm waiting the whole entire time. I'm not going long because I believe that we're close to the zero line and it's not really giving me trend direction. It needs to break up higher. It didn't do that. And all of this is a failure from here. It does break up above the actual inside of the previous deviation. But then what happens, it comes back down. And then once again, that's a failed new high. Because price cannot go back up. Dynamic target is drawn out in real time. So I like this movement here because I waited. I was patient enough. I didn't let my emotions go into this counter move, although it's a pretty long, it's a pretty long movement there going back up. But these are all failing down. And then that's my R1 again. I'm not going to write that in because we're going to go into a different instrument and different time. That's an R1. And then here's your R2 right in here. And I'll put a little box there. So when you reference back, so that's your R1 and that's your R2. Why? Because the bars are going outside of the momentum band and the deviation is to the downside or below the zero line. It's that simple. You've never traded against a trend. This movement here up wouldn't scare you. The only thing it would do is it get you out of the actual trade that you look down at. Okay. So just, moving quickly, let's look at this. Let's look at this on a tick. On a tick chart. Let's do a 987. And if you have multiple charts up, 5-minute works well with the 987. If I go back from what we looked at on the 5-minute, you can see it just does it quicker. So the same factors are actually here. So on a smaller time frame, it speeds the market up. On a larger time frame, 10, 15, 30 minutes, an hour, it slows the market down. So you can see here, here's your, we'll just split this off really quickly. So here's your, and that's important to the question that we had about is this real time or not? So now that we're at a lower time frame, let's quickly we'll look at the risk factors that are here. So this is your R1 right off of a failure. I am green here, so I can go long. And this is just mirroring, this would get you in earlier than the 5 minute because it moves quicker. So if you have the 5 minute, 987, 30 minute, we'll go through range 2 and wrinkle. So it's working on everything. This is your R2 right here as the bars start to come out. Where's your failed new low? Think about it. Where's your failed new low? And this is going to appear on every chart, every financial instrument, and every time frame. That's your failed new low. If it fails to retest that session low, pre-session low. And then it just mirrors it here up. So we see it every which way. Don't want to take this again because we're below the 0 line. Let's look at for our Rinko and range people. Any questions, Matt, or they're getting it? So here's
no questions, but we probably should wrap up in a minute or so.
okay, really quickly. So this is Rinko and the range would be the same. So this is a 7 range. And you can see here, wow, look at that on the 5 minute. That's what I wrote all on the 5 minute. Here's all your failures. So it works. It's that easy. Green, we go long. There's all the different factors that I wrote on the 5 minute. Works perfectly. Like there all you should. I mean, enough said there. Let's look at I'll show the NQ. So as you can see, it works on different time frames, different financial instruments. We make it very simple to understand price action. It's very important that all of our studies are based off of interpreting price action. All right, Matt, if you want to cut in, this might just take a little longer
Okay.
on the
All right.
NQ.
All right. Thanks,
Thank
Paul.
you very much. Best of trades.
Okay, Paul, can you stop
Okay.
your screen share?
It should be good.
Okay, thanks everybody. So this is how you can follow us on StealthTraders. Paul is constantly tweeting about setup CCs in the market. You can see all our videos on YouTube, and you can follow us on Facebook as well. And this is how you can contact us if you want to reach out. Just to let you know, we've been around for about 7-8 years. We have many happy customers over that period of time, and I think we've been a NinjaTrader partner for about 7 or so years as well. So we're happy to answer any questions that you may have, whether those are trading questions or questions about our indicators or anything like that. Certainly visit us at StealthTraders, and we want to get to our special offer. So for being at this webinar, we would like to offer you 20% off all indicators, and full stealth mode. So full stealth mode is already specially priced package of all 5 of our indicators. That includes the hyper snapback, the momentum band, the dynamic targets, which you saw, and the LRC, linear regression channel. You may have noticed that on the screen, although we didn't, unfortunately, didn't have any time to discuss that one. And also the money velocity indicator, which was not on the screen at the time, but that's it's a visual representation of time and sales data
Real time.
in real time, which we find very useful as well. So you're going to get, and if you get full stealth mode, you get an additional 20% off the already discounted price of the full stealth mode. And also on top of that, if you get this full stealth mode today, you will get 2 free 1-hour sessions of live one-on-one market training with Paul personally. This is just one-on-one, you and Paul via Skype, if you purchase full stealth mode, and that's 2 full 1-hour live market training sessions. You're going to learn a lot. He'll answer all your questions in those one-on-one sessions. It's very helpful. And also to let you know, if once you become a customer of ours, we always answer all your questions. You email us, where we respond. If you have any trading questions, we're always happy to help. So just go to StealthTraders.com or StealthTraders.com/indicators, and we really appreciate you joining us today. Learning a little bit about our system, and we hope you learned something, and we hope you become part of the Stealth Traders team. Paul, is there anything you wanted to add before we wrap up?
No, I think you covered it. I'd just like to tell all the Stealth Traders that have, customers, students that have been with us. It's always important, this video was made today, so you can go back and look at it as a learning instrument, and it will definitely make you a better trader, and you have a feel of the market. It takes all the emotion out of trading, and it makes you a better trader. And thank you very much. Thank you, NinjaTrader and Juanita.
Yeah, and I'd just like to add that all of our indicators are fractal, which means they can be used on any instrument, any time frame, any tick, and as Paul pointed out, range, Renko. So any time frame, whether you're doing short-term scalping or longer-term trades, the system works the same. So we'd like to thank NinjaTrader and like to thank you for being here. Just please note that the coupon code expires at midnight Eastern time tonight. So if you're interested, please take advantage of that today. If you have any questions after the webinar, feel free to reach out to us. I'll go back to the contact. You can contact us by the phone, contact@stealthtraders.com. Okay, thank you, everybody.
Thank you again to both Matt and Paul of Stealth Traders for taking time to share with us today. If you enjoyed today's session, we hope to see you in future webinars. We'd like to remind you the information provided in this was that of Stealth Traders and not of NinjaTrader. All information is for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see everyone in future webinars. Happy trading from the NinjaTrader ecosystem team.